Hey folks, Diane and Marina, I can see that you're in the room. Apologies, we're running into some technical trouble on our end. So thanks in advance for your patience, and please bear with us while we make sure we can get everything going.
Hey, Michael, when I click the video, it kicks me out. So maybe I'll just not chance it again.
Yeah, same with me.
Oh, sorry about that. I was muted. Kyle and Greg, can you let me know if your cameras are working now? There we go. There he is.
It's working.
Perfect. Sorry about that, folks. Appreciate your patience. For those of you who are joining, a warm welcome. My name is Michael Sullivan, and I'm here with the Giving Block. I work in partnerships management here and am joined by two of my favorite partners, your part-time controller, as well as RenPSG, or Renaissance Philanthropic Solutions Group, if we're gonna use the long name. But you're not in trouble. When I use middle names, it doesn't mean you're in trouble. So
That's right. That's right.
Yeah. So I'd love if we could start with just some introductions so that those of you who are joining us today know who's going to be talking about year-end in-kind giving. And then we can start to chat about what that looks like and why it's important for the nonprofit sector. So again, I'm Michael Sullivan. I work in partnerships management. My background is in supporting technology stacks at nonprofit organizations throughout North America. And most recently, I worked at Blackbaud for about 5 years in their solutions engineering department. But now I get to work with wonderful folks like Greg and Kyle on making sure that the entire philanthropic community is aware of the value that crypto brings. So thanks so much for joining today. And Greg, I'll pass it over to you.
Great. Thank you, Michael. My name is Greg Indictor. I'm a manager at your part-time controller, and I run our Sunshine, New Jersey or Princeton office. We are a national accounting firm that specializes in nonprofit accounting. We really work as controllers and CFOs for nonprofit organizations throughout the country. And obviously with the giving time of year, organizations have questions about gifts that they may receive. Some of those are, of course, gifts in kind. And there's some new reporting requirements that may affect your financial statements going forward. And also here to answer any other type of nonprofit accounting questions you may have.
All right. My name is Kyle Christopherson. I'm a Senior Vice President for Client Success at RenPSG. And for those of you that are not familiar with RenPSG, we provide philanthropic services to nonprofits as well as financial institutions for providing administration services as well as technology solutions for all charitable gift types. And so I've hosted a variety of different roles at my 21-year history at RenPSG, from doing the accounting for charitable trusts, donor advised funds, to provide administration, compliance support, tax returns, tax forms, and also providing case design assistance to financial advisors, attorneys, CPAs, plan giving officers in developing charitable planning strategies that are designed to achieve the goals of their donors. So I look forward to talking to all of you today.
Perfect. Well, thank you both so much for those introductions. And folks, I'm sure that most of you, if not all of you, are now intimately familiar with the ins and outs of Zoom after we all went through 2020 together. But please make use of those tools as you see fit. Feel free to For example, put questions in the chat. I'll be monitoring that as we go. So if you have questions or comments or just want to share some of the in-kind giving streams that have been successful for you and your charity, please feel free to put them there. But what I'd like to start with is to chat a little bit more about what we're here to discuss and what we're not, by which I mean make a disclaimer to stress that we're not necessarily representing your accounting team on this call or your auditors. With any of the ideas or strategies or protocols that we talk about today, when it comes to in-kind giving, we would encourage you to consult with your direct advisors in that way, or reach out to, for example, Greg at YPTC if you don't have a controller, for instance, and are looking for support in that way. Anything else to add in that sense, gentlemen?
It's something we always advise our clients working as controllers and CFOs in financial accounting. We typically don't give tax advice. Tax advice is ever changing. So any tax issues, we would strongly recommend having that conversation with their tax preparer or auditors. But again, some insights that we can provide, we will, with keeping that in mind.
Yeah, just to reiterate that's a great point. All the cases and plans that we put together for our clients, for our donors, you always have to involve their legal counsel, their financial counsel, because that's the only time where you really get into the weeds to figure out the direct impact from, say, for example, a closely held business contribution, knowing the ins and outs of what's going on within that corporation to know the tax implications. But we definitely can be a support. We can be a resource to help supplement that team, but it's always going to require financial counsel to bring it all together.
Beautiful. Love it. Glad we're all on the same page. And again, folks, if you had questions or needed support with connecting with a controller, I would advise reaching out to Greg after this. But what I wanted to start talking about in this panel discussion was some of the new rules that have gone into play regarding in-kind giving, as well as how that might affect charities that are represented here today. So Greg, I don't know if you wanted to take that first to discuss some of those new rules, and then we can chat about them together.
Yeah, yes, thank you. So the accounting standards, FASB issued an accounting standards update this year. It's ASU 2020-07, and it is related to how to report in-kind gifts of non-financial assets. And although FASB did not make any changes to the definition of what's considered a non-financial gift, it did change how that's going to be reported on financial statements. This goes into effect for fiscal years ending after June 15, 2021, which means for most organizations, your financial statements for next year. It's not going to affect your June 30 closings this year. So on the face of the financial statements, a very slight change. Organizations are now going to have to separate contributions that they report as revenue into two lines: those that are cash contributions or financial asset contributions, and those that are non-financial asset contributions. So two lines now on your statement of income. But most of the changes really come into the disclosures, the footnotes to your financial statements. And FASB is really enhancing, in terms of transparency, what you're going to be reporting or what you reported, describing it better. So the first disclosure, and it's not necessarily separate disclosures, but components of a disclosure when you have non-financial assets that were contributed. You have two choices. They could be monetized, turned into a financial asset, or they can be utilized. So you're going to have to present the different types of non-financial assets that you receive and say which one you're doing. I'm going to monetize it, or am I going to utilize it? If you're utilizing it, you're going to have to describe the program and the manner in which you're utilizing those non-financial assets. And then we're going to have to then disclose a little bit about the valuation, how you value those non-financial assets. So in terms of valuation, we want to look at what's that principal market, or what's that market that you use to help value. So you can have a principal market where those goods or services are freely exchanged, or maybe there isn't a principal market and you're going to have to determine a most advantageous market to help determine that. So you're going to state that in your disclosure as well. Of course, not necessarily a change, but if there's any donor imposed restrictions on that contribution, you're going to have to state that as well. There's a couple different ways that you can do this. You can have a chart. You can just have a narrative format, a columnar approach. But when disclosing it, you want to disaggregate the different types of non-financial assets, such as services or clothing. So supplies, they'll have their own separate lines like real estate. And then as I mentioned, for each one of those points, utilized, monetized, how you determine the fair value, and which market you used.
Got it. That's a lot of great information. I don't know that I understood the scope of that change, even though I'll admit to being the kind of nerd who checks ASUs to see how they might have affected charitable giving and the nonprofit sector. I imagine this is probably something that's crossed your radar as well, Kyle. Probably because you check these things like I do. But I'm wondering if we've been hearing already, questions coming from our clients and their friends about what is and is not financial. If the new update is about distinguishing between those two in some of the required reporting. Is that the kind of thing that the nonprofits that have joined us here today should just be making sure to check with their auditors and their accountants about as those gifts are coming in? Or do most organizations just wait to see if it comes up on audit at end of year?
So I would say you definitely don't want to wait for it to come up during the audit. If you have questions, it's best to ask your auditors during the year, and you can have that open conversation with them. If it's now in the middle of field work and these issues come up, well, that could be an issue that the auditors may present in a management comment that the organization wasn't up to date in the rules. So the good thing is that this update didn't change the definition of what's a non-financial asset, just really the presentation on the financial statements.
Got it. Okay. That makes perfect sense. I'm really glad that we're able to put this in front of this audience, especially at this time of year, right? So that as those assets start to come in, they can start to qualify them based on that policy. I think it might be helpful at this stage if we just talk through, especially to drive hopefully some imagination among the folks gathered here today, different kinds of in-kind gifts, which I know we've all seen a lot of, and maybe even share some fun examples of in-kind donations that we've seen or processed during our tenure. I promise folks on this call that we're going to talk about some of the nuances of crypto as a de facto in-kind gift toward the end, but crypto, I'll admit it, is not the only fun thing in the world. I'm sure there are lots of other fun assets that have changed hands for charitable purposes. So what have you two seen in your time serving this market in terms of, assets that surprised you or even delighted you?
Yeah, there's definitely a lot of exciting gifts that I've seen over the last 20 years coming into various charitable gift types. It could be a charitable remainder trust, charitable lead trust, donor advised fund, charitable gift annuity. And, one of the unique things about charitable giving and the premise behind all of it is you're trying to avoid taxation. Most of the time, it's going to be long-term capital gain assets, and sometimes it's ordinary income assets that are fully depreciated. But a lot of donors just aren't aware that, hey, I could take this highly appreciated rental property, or I could take my closely held business and I can give it away to charity, still receive income, but I can also benefit charity at the same time. It's like I get to have my cake and eat it too. It's a great concept, and it's very powerful when we're talking to our donors about, hey, what are the benefits of charitable giving? And even for those donors that maybe they're not so charitably inclined, but we talk about the social capital story, where do you want to be an involuntary philanthropist or a voluntary philanthropist? One way or another, you're going to benefit society, and that's either through charitable giving or it's through taxes to the government. So some of the things that we've seen, just to give you some broad examples, it's, again, getting back to the fact that the donors really don't understand the benefit or that it's available to them, is really any asset that you own potentially could be a great asset to contribute to various charitable gift instruments. Most popular that we've seen is real estate, and it's typically going to be those individuals that will purchase various homes. It could be apartment buildings, and they renovate it, they rent it out for a period of time. They get to their retirement age and they're like, you know what, I've got 12 units. I don't want to keep going around fixing air conditioners, fixing windows, fixing roofs, whatever it is, getting those late night phone calls. But if I sell it, then I'm going to pay all this capital gains tax. I don't want to do that. What can I do? And so we see a lot of real estate contributions coming in for charitable giving strategies to avoid that capital gains tax. And there's also the next one right behind that is probably going to be closely held businesses. Closely held businesses, very popular. There's various nuances that you have to be aware of when you're talking about closely held businesses, whether it be a C corporation, whether it be an S corporation, whether it be a partnership. And really what we're looking for is those businesses that are going to have a flow through mechanism of income that's going to be recognized, because that's going to flow through to the charitable organization or the charitable gift instrument and UBITs of concern, all that good stuff. So there is a lot of due diligence that has to be done on closely held businesses for this real estate. And that is a service that we can provide as part of our case design analysis as well. But those are probably the two most popular charitable giving assets right now, even above and beyond what you would see for publicly traded securities, for stocks, mutual funds. Some more of the unusual assets that we have seen coming in is a gold coin collection, even gold bullion. We've seen art collections, different collectible items such as hood ornaments.
Kyle might be having a little technical issue, but to not be a Scrooge, but just to
Or these
bring
hood ornaments.
There he goes. Oh,
Yeah,
you cut
just-
out there, Kyle.
Oh, I'm sorry. Where did I cut out?
Hood ornaments.
All right, hood ornaments. So he would restore these hood ornaments and sell them for thousands of dollars, had several hundred of these hood ornaments that he was looking to sell. We've had entire farms that were sold, and the way that we structured that, and you've probably seen some farmers that they're looking to retire, their children do not want to be farmers, they want to go off into business. And as I was telling Michael and Greg earlier, that's my dream job, to be a farmer, so it makes me a little jealous. But I've helped us so far 3 different farms do a full liquidation through an auction, and you title the assets over to the charitable organization prior to the auction, prior to the deal with the auction, and then you sell everything at auction. It could be the combines, it could be the trucks, could be the tools. You look at the operation of a farm, there's numerous different assets that go into running a farm. So all of those different asset types were good vehicles for charitable giving. So whenever you're looking at working with your donors and saying, they say, well, I don't have a lot of cash to give. Well, cash is only one small piece of your overall puzzle. And you have to look at what physical assets do you have? What investable assets do you have? Because there is possible to take advantage of these tax strategies through charitable gifts, and also benefit the charity and the communities that you support.
So I was going to say, not to be a Scrooge, but from the nonprofit's point of view, you should have a gift acceptance policy, because not every gift is going to be beneficial to the organization. Of course, anything that could be liquidated and turned into cash would be helpful, but organizations should have a gift acceptance policy to make sure that the gifts that they accept can be monetized or utilized within their mission, especially when we talk about donor imposed restrictions. An organization can unknowingly accept a gift with donor imposed restrictions that they can't fulfill, and therefore that gift is going to be hanging out in limbo, or receiving non-financial gifts that can't be sold and converted to cash, and then they're maybe stuck with hood ornaments. So it's something that you can discuss with your board as far as a gift acceptance policy?
Yeah, absolutely. There's a lot of due diligence that you want to do before you accept any gift type. You've got to understand the risk. You got to understand, especially with real estate, if there are any environmental concerns, because that concern now becomes the nonprofit's concern. And so you have to do due diligence to make sure that you know exactly what you're accepting. So great point.
Yeah, excellent call outs, gentlemen. And I know that we ask to just take a look at gift acceptance policies as part of our onboarding here at the Giving Block. So I feel confident that a lot of folks who are attending today likely already have one, but I think a good takeaway from this conversation is to make sure that it's up to date and to review it relatively regularly as things change, right? Like new updates coming through from accounting standards updates, right? But more importantly, just what other new assets are out there. I mean, I think it's probably fair to say that a lot of organizations did not have cryptocurrency or digital assets, for example, reflected in a gift acceptance policy that might have been written in the 90s or the aughts or so. It also, I think, underscores the importance of having trusted advisors like YPTC or RenPSG if and when these possibilities come up. So maybe let's chat about that just really quickly, because I want to make sure that these folks are set up for success in terms of timing and not making potential donors wait, let's say. So for organizations that might not have, for example, hood ornaments or other kinds of collectibles reflected in their gift acceptance policy, if that becomes an offer from a donor, what should their next steps be? Is it to reach out to their advisors first, to reach out to trusted partners like you first, or even to qualify with the donor why they might want to give that way?
Yeah, Greg, did you want to go first? Or do you want me to?
Well, I was going to say, as a rule of thumb, when you're dealing with non-financial assets that might have a volatile market, a policy to exchange those for cash as soon as possible, like we would do with marketable securities. And of course, cryptocurrency is going to fall under that, is a great policy to have. But yes, part of building a board maybe involving having people with some of these knowledgeable areas or areas of knowledge to speak to lawyers, someone dealing with investments, or commodities. That's not a bad start. Your board might be a great resource. But go ahead, Kyle.
Yeah, and something else that you can consider, again, if you're concerned about accepting those assets directly, is you could look at using something like a charitable remainder trust. If the donor's looking for an income stream, the charitable remainder trust is going to have its own separate tax ID number. You could set up a charitable remainder trust for the donor to serve as their own trustee. And then simply the nonprofit is really the remainder beneficiary of that structure. That gives a little bit more flexibility as far as an exposure standpoint is concerned. But again, there's a lot of due diligence that goes into that to make sure it's going to be a viable asset, viable gift. If you do have a donor that's looking to make a gift and you're just looking for some advice and feedback to point you in the right direction, you can always reach out to RenPSG and we can help guide you along on some things that you could explore further.
That's wonderful. Thank you both so much. I know that, maybe we hope that a collection of hood ornaments will come like a thief in the night, but maybe not. But either way, it sounds like there are some guardrails in place or some helpers that y'all can reach out to if and when that does come up. And I think your call out, Greg, about making sure that it's a part of a board development strategy, right? To make sure that there are, if not experts, folks who are at least familiar with the ins and outs of what these workflows look like, to be able to kind of guide things like the adoption of gift acceptance policies. But it also sounds like it's important to not accept the gift before there's a plan in place. Is that, or before it's confirmed that the plan that's in place is reflective of that kind of asset? Is that fair to say?
Yes, yeah. If you're about to receive a contribution that's not covered under your gift acceptance policy, yeah, definitely do some homework on it just to make sure you're not getting stuck with a lemon. And of course, Kyle's example, a very bad scenario, receiving real estate that has environmental issues, and that kind of liability could really dramatically affect an organization.
So just on that front, I mean, I hope that it's not coming up in our industry too often, but is the concern there that that there would be that the property would not be able to be sold if environmental concerns were discovered, and therefore that the entire liability would just be held by the nonprofit while that's sorted? Is that what goes on with that hopefully fringe case?
I would, yeah, I think that's what we're referring to, is that,
Okay.
yeah, liabilities, accepting an asset and making sure that it's free of liabilities, I guess, is an even better way to describe that. But if an asset is received and it's impaired, that's going to affect the value and the ability to turn that into its full value, or at least the value that the nonprofit was expecting. And it may cost maybe some cost to the nonprofit to restore or address those impairments to bring that value back up. So,
Got it. Okay. Yeah, that does sound like a lot. I'm glad we touched on that. I'm also happy that we're talking about some of the revenue reporting needs that have come out since the ASU 2020, but I'm also curious to know about, or at least to chat about something that our clients bring up sometimes, which is 8283 forms or Form 8282 sometimes. Can y'all speak a little bit more about, what that is, why it's important in, our tax practice here in the US?
sure, yes. And for the donee, the consideration may be the 8282 form.
I also get them mixed up. You're fine.
The 82 form, not the 83 form. The 83 is going to be what's filed by the donor with their tax return for the contribution that they're making. We're not necessarily getting involved in that. And when an organization receives a donation, they're not assigning value to the donor. That's up to the donor to assign their value that they're taking a deduction for. For the nonprofit receiving the gift, if they have a gift of property, so it's not cash or investments, and they sell that property, they have to fill out the 82 form and then submit that to the donor to let them know that that asset was sold. Cryptocurrency is going to fall under that requirement.
Yeah, so that's why it comes up periodically, right? Some nonprofits that we work with get inquiries from donors on that front. And so anyone who's here today and one of the Giving Blocks customers, that's something that we're ready and able to support you on, because we offer support both for the charities that we work with as well as their donors, right? So if those inbound inquiries about either 82 or 83 forms are coming in, please feel free to reach out to us. And it's also fair to say that the donor might have mixed them up too. So if you think they're asking about 82, 83, I have personally found it helpful in my own practice to first clarify which one they're talking about, since like Greg pointed out, they're used for different things and sort of have a different workflow behind them. But I think that's an effective segue to just treating crypto, especially at year end, as a kind of in-kind donation, right? And being ready to reflect it as such in gift acceptance policies.
Yeah, and I can tell you from my experience and what I've seen here at RenPSG is that, crypto contributions and demand for crypto contributions, we've seen a significant spike this year. For example, as I mentioned earlier, we provide case design assistance to a number of different segments, financial advisors, plain giving officers to CPAs, and we work on hundreds of CRT cases and donor advised fund cases every year. But just this year, we've worked on 50 different cases specific for charitable remainder trusts related to crypto contributions. And the largest one that we're working on right now that'll actually be funded here in the next several weeks is, in excess of $100 million. So it's a significant opportunity to take an asset that's been locked up, and typically these are new assets that are going in and getting diversified into your normal stock mutual fund portfolio, but definite significant interest on the crypto scene for trying to turn this new asset into charitable gifts and do some good with it.
Yeah, I mean, I think it's safe to say on behalf of the Giving Block that we're also seeing a tremendous rise, right, in the interest that donors have in using digital assets, including cryptocurrency, to be able to make those charitable contributions. I don't want to hit that point too hard, because I recognize that if you're here today, you are already following us and aware of the meteoric growth of crypto philanthropy. But just speaking very briefly about why that is from y'all's perspective, which may be a little bit farther from the crypto scene than where I sit. Why now, right? What's driving this sudden interest in getting 50 different conversations of turning crypto into CRTs going?
Well, at the end of the day, it's all about money, and specifically to the donor, tax. And I think the market value increase over the last year or even more has been dramatic in the crypto, even though there's a lot of fluctuation. People are maybe sitting on a lot of long capital gains that they don't want to incur. So that's definitely a driving force, and probably the number one driving force.
Yeah, no, I agree with Greg completely. It's a lot of the growth that we've seen in crypto over the last couple years, and more specifically last year. And a lot of the donors that we're talking to have owned these crypto assets for 5+ years. And so now they're seeing this growth. They're like, hey, you know what? I want to diversify from this a little bit. They're obviously going to be very heavily weighted in crypto. And, if you diversify, you're going to pay some tax on that. And so, making charitable gifts is a great way to be able to offset some of that taxation.
That makes perfect sense. And I guess, if the three of us could make predictions like this, we'd be superheroes. But does this mean potentially that the nonprofit world should pay attention to different kinds of asset classes that might come up in the future, which might, show a valuation, and therefore, for the reasons we discussed, become of interest to donors in making charitable gifts?
Absolutely. And it is very akin to stocks, and through many years that is a very popular way of giving to charities, whether a wealthy individual has an ongoing pledge. And I've seen many cases where every year some of our clients are receiving X amount of shares of ABC company, because that's their planned giving, and it's coming in the form of stock. This is just your vehicle for that. As people of wealth, wealth doesn't necessarily mean dollars in cash. It's all these assets. And it is, I think, probably a little bit easier now for nonprofits to exchange crypto into cash, as opposed to some other assets, non-financial assets they may receive, because there isn't a principal market established for them, or a marketplace that they can go to convert those non-financial assets.
Got it. So keep our ears to the ground, but don't necessarily jump at every new asset that might be trying to shoot the moon, particularly if there's not a proven principal market for its trading.
Absolutely.
Got it. That makes sense, and I'm glad to hear it. I know that people at nonprofits, especially the business office, have a lot to do without becoming experts in every emerging market overnight. But definitely important to see these waves coming whenever we can, and of course appreciate y'all's insight, Greg and Kyle, on sharing some ways that makes sense. So when it comes to cryptocurrency, for our customers, of course, there is a viable market for crypto, and for most of our customers, they've chosen to automatically convert the cryptocurrency following their gift acceptance policies to, the letter of the law, as it were. I would be interested in hearing from folks, and feel free to put it in chat if you'd like, if crypto was already reflected in your gift acceptance policies before the first offer came in or before you started to engage with the giving block. Is there anything that's on the horizon? And this is the part where like we'd be superheroes if we knew this, but is there anything else that's on the horizon that nonprofits might want to look at their gift acceptance policy and think, oh man, you know what? These hood ornaments are taking off. We should really make sure we have a call out for that.
I don't know what that next thing's going to be, but I was trying to explain crypto to someone recently, and I used the analogy of baseball cards, and they couldn't understand the concept of crypto, the fact that it's a limited supply. There's only going to be so many in circulation at some point, 2040. So there's a perceived value to people that value that particular asset. And I gave the analogy of, Pete Rose rookie cards. There was only so many that were printed. There's a limited supply, and people that care about holding a Pete Rose rookie card, you can tell I'm a Phillies fan, give value to that. So there's a market there, but at some point maybe there wouldn't be. So that's sort of the double-edged sword that we have to be concerned about. I think it's prudent to watch something mature a little bit, and I think we're seeing the majority of crypto, and then that's, I guess, also to your why now, that market is maturing.
Yeah, and I think another telltale sign as well is to look in the worldwide and see what the adoption rate is for corporations as well, to start dealing in crypto as well. So that's a good indicator of market adoption, and obviously the better the market adoption becomes, the more likely you're going to see these requests for crypto contributions.
Yeah, that order of operations definitely makes sense. And then, backing away from the future maybe and looking more closely at the present. I know we talked about some fun examples of in-kind gifts that we've seen, as well as, some standard stuff. I know in my own career that I've seen a lot of gift acceptance policies mention stock gifts and mention real estate. And it sounds like that maps to maps to what y'all have seen in terms of what has actually been processed. I've seen, stocks, real estate, also automobiles. So for automobiles, is that something, I don't know why I'm saying it that way, cars. For cars, is that something that y'all see, often reflected in gift acceptance policies, or, are most nonprofits using sort of pass-through bodies in order to accept those gifts? Or are they often going into use for programming, which would, back to your point, Greg, be a different way to book it?
Yeah, absolutely. So there's many organizations that definitely utilize a gift of an automobile because they're delivering food or supplies in their community, but then probably just an equal amount that will monetize. So they're accepting anything that they can then turn to cash. So that disclosure that we're going to now provide or have to provide in our financial statements is going to have to speak to that. We receive this automobile, we're using it in our homeless food insecurity program, or we have a policy that we will take that to market and sell that as soon as possible. But that's another, automobiles definitely up there with stock and real estate as non-financial gifts that a lot of organizations receive.
Yeah, and I imagine that might also be driven by the fact that in the United States, many of us own real estate and treat that as a primary investment for our families, right? And also own cars because we have to get places usually. Yeah, so I think that checks out. And part of what that means is that all of the nonprofits that are here today probably have supporters who are at various times willing and able to use these assets in charitable ways. What drives because I know this is something that we've chatted about, the fact that this tends to happen toward the end of the year, right? It's not necessarily in April that people are having these ideas or these questions. What drives the the holiday drive, so to speak?
Well, yeah, from what we've seen, it's always about tax planning, and people are charitably minded. For the most part, if you look at the country as a whole, it's a very charitably minded country, but there is the tax aspect of making these charitable contributions, and you have until December 31st to get your charitable contributions in so you can claim it on your personal tax return. And what happens a lot of times is, the year gets busy, you got other things going on, and tax planning is probably not something that's really exciting for a lot of people. And they push it off until the end of the year. There's other things that come up, other priorities. So it becomes a rush at the end of the year where everyone's trying to get their charitable contributions. They figured out what they've made during the year. Now they know what they need in a charitable deduction. Now they need to get that charitable deduction. And it's all very tight time frame around year end. For example, with all the administration that we do and handling grants, handling distributions, contributions for all the charitable gifts that we administer, about 40 to 50% of all of our year-end transaction activity workload occurs in the last 6 weeks of the year. So it's very intense at year-end because of that aspect.
And, now with the current tax laws, and this was a fear in the nonprofit community a year ago with the change to the deduction for charitable contributions, removing it from itemized deductions, there was the fear that was going to dramatically impact charitable giving. I think the common experience of a global pandemic maybe offset that, and people all over have become even more charitable, which was great. So maybe a shift to wanting to support one another as opposed to just being a tax deduction. And that's something that can be maintained all throughout the year. So hopefully that momentum continues. And I guess it's maybe I'm being a little naive to think that people are not driven just by the deduction, but hoping at least.
Well, I don't know that it's naive, Greg, to look back at the pandemic and quarantine and how that affected us all and see some of the ways that it might have changed the market. I don't think you're giving yourself enough credit, candidly, because I know that it's also relatively easy to look at large market forces like tax law changes and see how that might have affected things. I think you've got great evidence right there that the fear might have been unproven because of a rise in altruism resulting from a shared experience. Yeah, I mean, I couldn't have put it better myself. And for what it's worth, I think it's safe to say I'm also hopeful that we see that continue. And I think everybody else on this webinar is as well. When it comes to, positioning, I guess, for the nonprofits who are on this call, when it is end of year, circling back to being ready to accept gifts once we know that the policy's in place on how to do that, once we know who our stakeholders are and partners are to reach out for help. Is it already too late, for instance, for charities who, might want to flag for their own supporter base that these are ways in which they can provide support?
Well, it's definitely not too late. This is the season. I get tons of emails and mailers. This is the holiday season. That's another driving force, I think, to the uptick in this time of year. A lot of organizations have this final campaign to bring it home, but many organizations don't follow a calendar year, fiscal year. They have fiscal years that end all during the calendar, June, September, whatever. So it's definitely not being tied to their last push for their financial statements. This is the time of the year, and organizations hopefully are taking advantage of it. The next 2-3 weeks, a lot of requests. But for these organizations, including their marketing, that there's other forms of support that they can receive, crypto, non-financial assets, they'd be happy to accept them. And that might be something that they're missing out on if they're not aware that they can accept these and what they can do with these assets once they do accept them. And that's
I just wanted to reiterate what Greg said, that it's all about making sure that your donors understand that there are other avenues to be able to support your organization. And a lot of times they're just not aware of it. And by making them aware of crypto, making them aware of real estate or stock contributions, things like that, it's a great way to make sure that you're being able to get more engagement from your donors.
I'm so glad to hear that. I'm sure that everyone on the call is glad to hear that it's not too late, right? Especially if the gears are just starting to turn. And I'd be remiss if I didn't point out that this is, part of what we here at the Giving Block make sure that our customers know about end of year giving, since crypto donations largely follow that path of let's say coming in December, right? So something that we've been open and honest about is the fact that because it is a capitalized asset in many cases, circling back to your point, Kyle, that they've been, often holding it for many years, or hodling, as it were, we anticipate that a lot of crypto donations are going to be run this month. Right. And for that reason, those of you who've already managed to sign up with the Giving Block, you've got it, right? You've got the gift acceptance policy that refers to it. You've got our donation form and widget in place in order to be able to accept those gifts. And just like Greg and Kyle pointed out, and possibly even at our suggestion, you've notified your supporter base that this is a kind of asset that you're able to accept charitably. I think something that's different and a little unique about crypto is just the speed and efficiency with which that transaction can take place. This, particularly if you're using our option to have that automatically converted, right, to US dollars once those donations are coming in. So yeah, for those of you who haven't yet considered working with us here at the Giving Block, I would encourage you to, reach out to me directly after this webinar, and we'll make sure that we can get you set up. But I recognize the names that are here today, and I know that many of you are already good friends. So just know that we'll continue to support you with charitable giving and in-kind gifts through friendships with wonderful people like Kyle and Greg, and wonderful organizations like RenPSG and YPTC. I'll admit I almost got it mixed up and called the orgs people and the people orgs, but that's why we have CRMs, folks. So I wanted to make sure that we covered any questions that the attendees have before we wind down too far. I haven't seen any come through the chat, so I just wanted to give a quick call out. Please make sure that it's going to either hosts and panelists if you had questions, or send it to everyone if you don't mind everybody seeing it. But any questions or concerns about year-end in-kind giving and some of the topics that we've chatted about today? All right. Well, good. I hope that means that we cut all of your question horses off at the pass, so to speak. And I know that most of you, or all of you rather, are already set up and ready to accept donations. Because we're recording this webinar, I'll just speak, to the ghost of Christmas future, perhaps, to keep it on topic with the season. But for those of you who are looking back in time, please do feel free to reach out to me directly, and I'll make sure that our contact info is included there so that you can ask questions if they do come up. Please do reach out to our friends at Your Part-Time Controller, YPTC, if you're looking for support in accounting, right, and in your business office, and making sure that controller service is something that you have a trusted partner for. When it comes to some of the services that Kyle mentioned, please keep RenPSG in mind in your Rolodex, particularly if you do need support with some of those more complex asset engagements. Certainly probably your go-to person. I think we all know now, if any donor suggests that they have a fun collection of automobile parts that need some support. So I want to also thank each of you, Greg and Kyle, for joining us today and for having this discussion, both for the people who joined us and for posterity. I know that it can be, it can rack nerves in our industry when those accounting standards updates come out, for example, or when donors are asking questions about assets that the market's not ready for. So your attention to detail here and to this topic is so appreciated, and I just can't thank you enough.
Great. Thank you for having us. Appreciate the opportunity.
Absolutely. Have a great afternoon.
Thanks so much, team. Have a great rest of your day, and we'll be sharing out the details from this call later. Thanks again, and if you're heading to lunch, enjoy.